Rental properties are a solid investment choice that can help bring in a high return on investment through passive income. However, getting started in the world of real estate investing isn't always an easy task. The biggest thing that may be holding you back from getting into real estate are the costs associated. Most people don't want to lock their savings into an investment property. Others simply don't have the money at hand that they need for a down payment. That's why in this video I'll tell you exactly how to buy an investment property with even less than 20% down. Luckily, you don't have to empty your bank account to purchase a rental property. Believe it or not, it is actually possible to buy a rental property with little to no money down. With a little bit of creativity, you can easily purchase a home and start enjoying all the benefits of owning rental property. Here are a few methods you can use to buy rental properties with less than 20% down. Number 1. House hacking. Depending on your current primary residence, you may not even have to buy a rental property at all. House hacking is a common investing strategy that involves converting a single-family residence into a multi-family home by renting out a portion of the property to tenants. This space could be anything from a basement, guest house, or even a garage or apartment. You could even renovate the home to create a true multi-unit living space like a duplex. House hacking has become a popular method for newer investors who want a passive income without having to put money down on a rental property. Number 2. Seller financing. Also known as owner financing, seller financing is a non-traditional form of financing in which the seller or owner of the property holds financing for the buyer. In other words, they act as a bank, and seller financing gives the buyer more power to negotiate. Many sellers have set financing terms they will accept when it comes to interest rates, down payment, or loan periods. Many of these terms can be negotiated depending on your seller and your negotiating skills. This can include negotiating financing with little to no money down in exchange for a longer loan period. Figure out your seller's needs and come up with a solution that works best for both parties. Number 3. Hard equity line of credit. Leveraging your property with a hard equity line of credit, or HELOC, is another way to buy rental properties with no money down. HELOC loans allow buyers to use existing equity in their current home as collateral towards the new home. Buyers will receive a lump sum payment and repay the loan with a fixed rate interest over a set period of time. By accessing their home equity, buyers don't have to pull money out of their pocket to buy a new property. Instead, they can use these funds to finance a new down payment and acquire a rental property, with more rental properties and more capital growth. Your equity will grow faster, allowing you to acquire more properties and build your rental portfolio with ease. Number 4. Rent to own. This option is excellent if you also need a place to rent out. By leasing a rental property with the option to buy it, you and the landlord agree that a portion of the rent goes towards the property purchase. Both parties can also agree on a lower down payment. A timetable is then set for the tenant to purchase the property. Leasing with the option to buy gives real estate investors the perfect tenant perspective, as they will have lived in the property and become comfortable owning their home. Number 5. Real estate partnerships. You don't have to go into a real estate investment alone. Buying a rental investment property with no money down can also be done with a real estate partner. In a real estate partnership, you and your real estate partner agree to share ownership of a property. If you don't have enough money to put down, you can find a trustworthy investing partner who can help you out financially. A real estate partner could be family members, friends, or colleagues. You could also work with a private lending company. These companies offer loans similar to a bank but offer more flexibility. One of the best partnerships you could enter into as a first-time investor is with a more experienced real estate investor that can help you out financially, as well as help show you the ropes of rental properties. Number 6. The BRRRR Method. The BRRRR Method, which stands for Buy, Repair, Rent, Refinance, and Repeat, is a great way to buy a rental property with little money down. This method allows investors to buy a property, renovate it, rent it out, refinance it with a long-term investment loan after its value has increased, and then pull their initial cash back out. The amount that is pulled out is based on how much equity you have built into the home. While this method does require a bit more money upfront towards a down payment, you will also get it all back once you refinance. Rehab projects are considered too risky by traditional lenders. So, for your first project, you may need to use one of your local hard money lenders. After refinancing, investors can use the cash-out refinance from their first rental property to fund the purchase of their second rental property. This essentially leaves them with little to no down payment for future property rentals should they continue this cycle. Number 7. Owner-occupied loans. Arguably, the best way to buy a rental property with little money down is through federal loans. For starters, these loans have less strict credit requirements than those of conventional loans. They also have lower interest rates and, of course, lower down payments. The catch with these loans, however, is that they must be used on a property that will be the buyer's primary residence for the first year after purchase. Then the property can be converted to a rental without any changes to the loan terms. If you buy a small multifamily home, live in one unit, and rent out the others, you can buy the rental property with a federal loan. FHA loans are the usual go-to for house hacking. They are known for their low credit requirements and down payments as low as 3%. Federal owner-occupied loans are also available through the USDA and the VA. Number 8. Private money loans and partnerships. You can also get low down payments investment property loans through private money loans and real estate partnerships. Private money mortgages are loans financed by private individuals such as friends and family. Through a real estate partnership, you and many other investors pool resources together to buy rental properties. Both financing methods allow the investors themselves to set loan terms. As a result, you can agree to pay a loan or even no down payment. In exchange, however, you may potentially pay higher interest to be responsible for managing duties. Number 9. Hard money loans. Hard money loans are another method for securing low investment property down payments. They can even be used if you're interested in learning how to invest in real estate with no money. Hard money lenders do not look at credit standing for qualification. Instead, they'll judge the investment based on the market value of the property. For all the immediate financing they provide, hard money loans come with two main catches. For starters, hard money lenders require high interest rates, and you usually have to pay back the loan much faster than the typical 15 or 30-year loan. If a property is projected to be very profitable, hard money loans could be well worth it. Do you have to put 20% down on rental property? Even with all the benefits mentioned, a 20% down payment on a rental property is not an absolute must. Instead, you can explore the main methods of buying an investment property with less than 20% down. The success of each method will ultimately depend on a real estate investor's goals and resources. Be sure to weigh the pros and cons of each method to see what works best for you. What truly matters with down payments is how they impact your return on investment. Let me know in the comments if you plan on buying your first home. Subscribe so you don't miss the next video. And if you made it up to this point, watch this entire playlist here where we give you free tips on how to get approved for your next home. I'll see you in the next video.